Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 19th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that impacts the markets with my market analysis. And I'm going to do the same thing for you folks out there, but I'm going to layer on top of it these option strategies that I find to implement into my portfolio based on those assumptions we come up with the market analysis. And we don't just pick option strategies out of the hat. A bullish assumption doesn't just mean going out and buying a long call or a long call spread. It very well may, but we have to determine what the environment is around that underlying before implementing a strategy. And then we follow my roadmap to finding the right option strategy. So please check out our webinars as we go into the details of how to find the right strategy for any given assumption. I do a little bit of that here in these daily market commentaries, but I'm kind of under the assumption that you guys have watched a few of those videos so you can follow along. I do touch on some of the rules in and around them in this webinar. Also, check out the earnings trades for this earnings season. Make sure you follow those guidelines for implementing options around an earnings trade. All right. So without further ado, let's get on with the economic data. Across the pond, pretty quiet. We did have Powell speaking earlier today. We also here in the United States got the NAHB, which is the National Association of Home Builders Index. And that one knocking it out of the park, coming in at 85, the highest reading we've seen basically since the highest reading we've ever seen, but it's higher now than we saw back in the 90s, which was when we saw the real housing boom going on. We're seeing that again here in this, showing up in this particular index. Also, that is driving markets like wood, lumber futures are going through the roof. As a matter of fact, I have a friend that does a lot of arts and crafts, if you will, makes some plaques, and his budget for wood has almost doubled. So really seeing some strong demand there across the board. So the housing market really driving those prices as well. So that is a problem that these housing markets are seeing right now. It's difficult to make a low budget home right now because of the prices of the materials going into those homes. All right, so let's get on with the markets here. We've got crude oil up just slightly, hanging out right there at that $40 we've been talking about. It is the sweet spot. I don't think we're going to see crude oil make much of major moves in either direction, to be honest, especially with the turmoil we've been seeing going back and forth in the economy. One thing to note today was overnight optimism on a stimulus package. Today, it seems like there's a little bit more pessimism, which is causing the overall equity markets to come off a little bit, giving gold here a little bit of a boost, still about $10 away from that real key support resistance area of 1923. So we're going to have to keep our eye on that. It did test it earlier, and we're starting to pull back away from that above the 9-day simple moving average, which is something that shorter term traders are going to be looking at. Another thing to keep in mind, that resistance area at 1923 got just a little bit stronger with the 50-day simple moving average coming down and kind of getting ready to clip that. That's going to act as a major resistance area there when we try and breach it again. Also, with that being said, the pessimism coming in on the lack of a stimulus package probably is superseding the good NAHB that we just saw there. And we do also have a couple of other Fed governors speaking later on today, Harker and Clarita. All right, so anyway, gold futures we've talked about. Bonds are coming off, but it looks like they're trying to make a bit of a charge here with the equities down. It's going to be more of a flight to safety. Fed governors are still saying they're not going to raise interest rates anytime soon, so I'm expecting more of a bounce here in the bonds, but it seems to be getting really comfortable here at around the 174, 175 handle, and where I've expected it to be is up closer to the 178 handle. So I don't have any positions in there, but that just seems like the sweet spot to revisit, if you will. All right, so VIX is moving higher, and that's why, because we've talked about the equities seeing some weakness here. Dow Jones down only 10 points on the day. And, after the setup on what we had Thursday and Friday of last week, makes it more of a continuation pattern. And today, a settlement near the lows or even starting to slide a little bit more is going to be more confirmation of a market that wants to migrate back to the point of control, which is right here where the most time and volume has been spent. We've done a nice job of filling in this low gap. That was a pretty decent trough there in this chart. Starting to fill that back in with some time and volume, creating a nicer big bell curve there. But the point of control is still a little bit lower. We haven't gained a move higher in that point of control in quite some time. All right, and we have the NASDAQ down about $8 or eight ticks on the day. Again, just not looking very solid on a chart here as to trying to make a recovery here. Do have a bit of an inverse head and shoulders there, but that isn't being confirmed at this point. Or it actually happened and broke through the neckline, made a spike, but we're starting to retrace that. So usually I would have expected us to try and at least test those all-time highs there in the NASDAQ with that kind of setup. And we have the E-mini S&Ps here just unchanged on the day, making it back to unchanged as we're speaking here and into positive territory. One could say we've got a mixed bag right now because the markets are making a bit of a move here. You can see overnight was where we saw that more positive sentiment coming into the day session, and no bounce really. Maybe, I guess you could say we got a little bit of a bounce on the National Association of Home Builders Index, but market overwhelmingly bearish today, as we can see. A lot of profit taking probably heading into this week as we are starting to get into the mix of earnings season like I talked about earlier on. Make sure you check out those videos on earnings for the right option strategy for your given assumption. It's not just picking option strategies out of a hat here. What we do is we follow some guidelines, and my guidelines for earnings are slightly different than what we would see for a normal trade in and around a bullish or bearish assumption. So with that being said, like I mentioned earlier, earnings season coming into full swing right now. We've got IBM after the close today. Tomorrow morning, we've got Procter & Gamble. Those are probably the two I'm going to be keying on. There's also tomorrow morning, we've got Albertsons. And now, I'm not going to trade Albertsons, but keep in mind, I do have on a Kroger trade. If you guys remember, I bought some calls in Kroger a while back. So we'll be able to see how the supermarket industry is doing, or at least get a little bit of a glimpse into that with that earnings trade on Albertson. We also, like I mentioned, Procter & Gamble. Later on this week, we've got Netflix, we've got Texas Instruments, Snap, Biogen, Chipotle, Discover, Tesla, Intel, Southwest, Coca-Cola. Big week ahead of us for earnings, so I'm going to be holding some money on the sidelines here. I'm not going to add any trades today because I want to get involved in these earnings trades, the quick hits, like that I like to call them. So here we go. We have Procter & Gamble. I'm likely going to be playing this to the upside. I don't think that there's a whole lot of downside with this trade. I think I can get some pretty good strike location in and around this trade. So I'll probably be playing Procter & Gamble to the upside, and IBM. I always want to play IBM to the upside. They really get beat up because they are trying to switch their business model to more of a service sector related strategy, and they have a tendency to get beat up for that. And for me, that's a high margin, low human capital type of structure, business structure. I think that that's going to do well for IBM as they would increase their profit margins that way. But, they are a service company, and a lot of people believe they should stick with that. But I think that their cloud infrastructure is really going to help them out moving forward in IBM. All right, so those are the two that I'm going to be playing. IBM, I most likely will play this to the upside. I don't mind getting long IBM somewhere in and around this point of control. You can see it just hasn't made a whole lot of moves. If we do put that stock, though, you can see with a trend channel that we have here, I'm going to have a great opportunity to sell covered calls in this, lower my overall cost basis on one of these trades that trends sideways and doesn't really go anywhere. As a matter of fact, this is how I cut my teeth in IBM. That's probably why I love trading this stock. It was one of the first trades that I ever started using options against a long position back in the early 90s. IBM and Walmart are the two that I really cut my teeth on with trading options. And it was because basically, looking at this chart, exactly what I was experiencing back in the day. I would sell calls back then just above 100 and then sell some puts in the 90s and continue to play that both sides, take possession of it sometimes, start doing the covered calls, get them called away, start selling some puts. Well, I'm going to start looking at playing that again for IBM with this earnings trade. I'm going to sell some puts, collect a credit for it. If I could put the stock, covered calls, and continue to play that between that 135-ish area to 116. That's been the range that it wants to trade at. So buy it somewhere in the teens, the 1-teens, and then sell it in the 30s. All right. So that's what I'm going to be looking to do today. And that's it for today's market commentary. Check out, like I said, those earnings trades. Those are super important. And follow us on Facebook. Give us a thumbs up if you like the video. I appreciate that. Another thing is hey, share it with your friends, because if you have something to take away from this, your friends are probably going to benefit from it as well. All right, so that is the best form of flattery online these days. Okay, that's all I got for you. If you can't take that, take it easy.